Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class we have solved a problem on dissolution, that is Akash, Prithvi and Sagar, right? Today we are going to take up the next problem, that is problem is 17. 16 is given for your assignment in the previous class, right? So let us solve problem number 17, Tanu and Sonu. Let me read out the problem, we'll analyze and we'll solve the problem. Tanu and Sonu are partners sharing profits and losses in the ratio of 5:3, that is 5/8 and 3/8. 5/8 and 3/8, correct? Yes. They agreed to dissolve their firm on 31st March 2018. On which date the balance sheet was as follows. Balance sheet is given on the date of that is dissolution. Cash at bank, asset side I will take up first. Cash at bank, not to transfer, internal, that is the most liquid one, cannot be sold in the market, correct? Cash at bank, that is balance at bank. So all the entries should be given as bank entries, not cash entries, remember. Stock, debtors, sundry debtors, both are one and the same. Investments, motor car, machinery, fixtures, all are tangible assets. We have to transfer all the assets. We have to transfer all the assets other than cash at bank, correct? Sundry creditors, bills payable, bank loan, all are outside liabilities, external liabilities. Bank loan is also external liability. We have dealt with in previous problem, isn't it? Yes. So transfer all the liabilities, all external liabilities. Then capital balances given Tanu and Sonu, no need to transfer because they are the capital balances will go to capital accounts, combined capital accounts, starting point by balance brought down on the credit side. Reserve fund, you know it very well, should be transferred to all partners capital account in their profit sharing ratio, that is given as 5:3, right? Let us move on to the adjustment part. On the above date, the firm was dissolved and the following agreement was made. Tanu agreed to pay the bank loan and took away the sundry debtors. That is, Tanu took over bank loan means liability taken over and agreed to and took away the sundry debtors. Agreed to pay bank loan means liability taken over, bank loan taken over, and took away the sundry debtors means assets taken over. So asset taken over on the credit side realization account, you should give an entry on the credit side of realization account as by Tanu's capital account taken over, sundry debtors taken over. For liability taken over, to Tanu's capital account, bank loan taken over. So that is what the entry is. Two entries you have to pass on either side. Then sundry creditors accept stock and paid rupees 10,000 to the firm. See, this is a critical adjustment, so I took this problem. Sundry creditors, when they take over any assets, here the sundry creditors took over what? Stock was taken over, so you cannot give any entry on the credit side. Like partner takes over the asset, you will pass entry by Tanu's capital account, sundry debtors taken over. But you cannot pass entry by creditors, debtors, there's furniture taken over, you cannot do like that. No, stock is taken also by creditors account, stock taken over, you cannot pass that entry. What you can do is, you have to deduct the amount, this amount from the sundry creditors and the and the balance amount, if any, receivable, that should be received on the credit side of realization account. Got confused? Yes. See here, let me take the same figures here. Sundry stock value is 75,000. What did they tell? Sundry creditors accept stock means at par value, balance sheet value, and paid rupees 10,000 to the firm. Firm received 10,000. So what you have to do is on the liability side, there is a debit side, to cash you will write to bank. In this case, to bank. Liability is paid off. Under that, creditors, how much was the value? 62,000 and minus 62,000, 0. You will not make any payment other than that, because they took over the stock, isn't it? Stock they took over, and in addition to that, they paid rupees 10,000 to us. So what you have to do is, stock should be bifurcated into two categories. One part is taken over, major part is taken over by the creditors, and the remaining was sold to them in excess of that. So when you realize the stock, you will get 10,000. The remaining stock was also taken over by the creditors. 62,000 worth stock was taken over by the creditors against what? The amount receivable from the firm. They were supposed to get 62,000. So that was recovered by receiving the stock, purchasing the stock from the firm. Then in addition to that, 10,000 rupees was paid to the firm. So we have received 10,000 from the creditors. This should be entered on the credit side of realization account, and this should be entered on the debit side of realization account. That is what the meaning is. They took the entire stock, no doubt. So what they did, out of the entire stock taken over, total value of the stock was 75,000, isn't it? They have collected 62,000, recovered their amount, whatever was supposed to be received. Then 10,000 they paid to the firm. What about the remaining 3,000? Question may arise, isn't it? Forget about that, because it was taken over at a lesser value than the par value, isn't it? The par value of the stock was 75. Now the creditors accepts it in full settlement for 65,000 by giving 10,000 to the firm. So 3,000 is the profit to the creditors. You just forget about that 3,000. You just pass entries for these two things. 62,000, that is, creditors will be made nil on the debit side. No payment to the creditors, because stock was given in exchange of that cash, isn't it? Then 10,000 cash was paid to the firm. Enter on the credit side under, that is, a bank assets realized, right? Stock partly sold stock, isn't it? Partly sold stock 10,000. Write that. So that is how you have to treat this. Understood now? Then machinery is taken over by Sonu for rupees 40,000 and agreed to pay bills payable at a discount of 5%. Machinery was agreed to be taken over by whom? Sonu, isn't it? So you have to pass entry on the credit side by Sonu's capital account. By Sonu's capital account, machinery taken over. Write the value 40,000. Then what he did? Agreed to pay bills payable at a discount of 5%. Bills payable amount is how much? Refer the balance sheet, 32,000 into 5%, calculate, 1,600 it will come, right? So 32,000 minus 1,600, that means 30,400. 30,400 should be paid, should be shown as, that is bills payable at a discount of 5%. Yes, you have to debit to Sonu's capital account. A realization account debtor to Sonu's capital account. You have to give credit to Sonu's capital account, and you have to debit realization account. So you will write here 30,400 to Sonu's capital account, bills payable taken over. Motor car was taken over by Tanur for rupees 60,000. Motor car being an asset. So by on the credit side, by Tanu's capital account, motor car taken over. That is the entry you will pass. Then investment realized for 76,000 and fixtures for 4,000. No doubt under bank account on the credit side, by bank assets realized, you will enter these values, isn't it? Expense or realization amounted to rupees 2,200. So you know it very well. On the debit side to bank account, expense or realization, you will write the amount, and in bank account on the credit side, by realization account, expense or realization paid. Correct? Yes. Problem is solved. Let us solve it. Let us solve the problem. Yes. Realization account. Draw the columns. Realization account. Yes, draw the columns. Debit, credit, particulars, amount in rupees. Particulars, amount in rupees. Provide for JF column also. JF column also provide for. Clear? Yes. Let us start. Realization account, isn't it? Yes. Start. To stock account. To stock account. Stock account, how much? 75,000. 75,000. Then sundry debtors, 55,000. Sundry debtors, 55, 55. Then investments account, what's the value of investment? 70,000. Refer balance sheet values only. Don't refer adjustment part. You will get confused otherwise. 70,000. Then motor car account, 90,000. Motor car account, 90,000. Machinery account, 45,000. Machinery account, 45,000. Fixtures, 9,000. Fixtures, 9,000. 9,000. Then that's all assets transferred. Now let us move on to the liability side. External liabilities by sundry creditors. By sundry creditors. Sundry creditors account, 62,000, right? 62,000. Bills payable, 32,000. Bills payable, 32,000. 32,000. Bank loan account, 50,000. 50,000. Tanu's cap, yes, that's all, isn't it? Then let us move on to the sale of assets. Let us sell the assets. Bank account, assets realized by bank account. Under that, assets realized, isn't it? Assets realized, how much? Stock 10,000. Stock 10,000. Stock 10,000. Then investment 76,000. Investments 76,000. 76,000. Fixtures 4,000. 4,000. That's all. Added together 90,000, right? 90,000. Then assets taken over, debtors taken over by Tanu, right? So by Tanu's capital account. Tanu's capital account. Debtors taken over. Debtors taken over. How much? 55,000. 55,000. Yes. Write the amount. Then next one is Sonu's capital account, machinery taken over. Sonu's capital account. Sonu's capital account, machinery taken over. Machinery taken over. How much? 40,000, right? Yes. 40,000. Then anything else? No. One more is there. Motor car was taken over, right? So Tanu's capital account. Tanu's capital account. Motor car taken over. Or remember friends, you can club here also. You should not write debtors taken over here. Assets taken over. Right here to by Tanu's capital account, within bracket assets taken over, add together both motor van and debtors and write the figure. Then one entry is enough. Otherwise, pass two separate entries, makes no difference for you. Correct? Either club together and write here within bracket assets taken over. Don't write debtors taken over. Or debtors and motor car taken over. So you can write like that. Add both the figures and write a single figure. Clear? Otherwise, pass two separate entries for both the assets taken over. Clear? Yes. How much this is? 60,000. 60,000. Yes. Then let us move on to the other part. Liabilities paid off first, isn't it? To bank account, liabilities paid off. Liabilities paid. How much under that? Creditors. How much we have paid? Don't enter the amount because we cannot pass any entries for creditors. So it is nil. 62,000 minus 62,000. Minus 62,000 nil. Clear? That is asset taken over, stock taken over by the creditors. So we have deducted 62,000 and made their balance as nil. Then to Sonu's capital account. That's all. Only one liability we have paid. Are there any liabilities? No. Bills payable was taken over. Sundry creditors. Yes, it was adjusted, isn't it? Creditors adjusted. Bills payable taken over. Bank loan. Bank loan also was taken over. So, to Tanu's capital account. Tanu's capital account. Capital account, bank loan taken over. Bank loan taken over. How much? 50,000, right? Yes, it is. 50,000. Then bills payable was taken over by Sonu. So to Sonu's capital account. Sonu's capital account, bills payable taken over. Taken over. How much? 30,400. 30,400. Then that is 32,000 minus 5%. Bills payable was taken over at a discount of 5%, right? Yes. Then there is expenses of realization to bank account, expenses of realization or cost of dissolution expenses, all are one and the same. 2,200. That's all. No entries on the debit side. Now let us see which side is greater. Debit side is greater, friends. There is a loss. Debit side is greater than the credit side total. So let us write the total of higher side first, that is debit side, 426,600. 426,600. Write the same total on the other side. 426,600. Isn't it? 426,600. That is what's the amount of difference? 37,600 is the difference. 37,600 is the difference. Yes. Now share it among the partners by Tanu's capital account, by all partners capital account, right here like that. All partners capital accounts, under that Tanu and Sonu. Share it among the partners. 37,600 into 5 by 8 and 3 by 8, isn't it? 37,600 into 5 by 8, 37,600 into 3 by 8 is equal to 23,500 and 14,100. 23,500 and 14,100. That's all. Right here, loss on realization. Loss on realization. Balancing figure. Yes, your first part is done. That is realization account is done. Now let us move on to the combined capital accounts of partners. So start. Combined capital accounts of partners. Combined capital accounts of partners. Only two partners, provide 2 columns each on either side. Yes, Tanu and Sonu in rupees, debit, credit, particulars, then write full names of partners, Tanu and Sonu in rupees. Over, do it fast. Yes, let us continue. Combined capital accounts. By balance brought down, capital account always shows credit balance, mostly shows credit balance, isn't it? By balance brought down, how much? 110 and 90, is that correct? Yes, 1,10,000 and 90,000. Then there is a reserve fund in the balance sheet, credit by reserve fund. Reserve fund 5:3, right? Their ratio, share it 10 and 6, 10,000 and 6,000. Then there is a loss on realization. There is a loss on realization, that is here 37,600 debit it to partners capital account to realization account loss. How much? 23,500 and 14,100. 14,100. Then liability taken over, here Tanu's capital account, isn't it? Realization account debtor to Tanu's capital account, bank loan taken over. So Tanu's realization account debtor to Tanu's capital account. Tanu's capital account is credited by realization account. Bank loan taken over. Bank loan taken over. How much? Bank loan taken over. That is, yes, what's the value of bank loan? 50,000, right? Yes, 50,000. 50,000 only in Tanu's account. 50,000. Then one more entry is there. Realization account debtor to Sonu's capital account, bills payable taken over. Bills payable taken over. So by realization account, bills payable taken over. Bills payable taken over in Sonu's capital account, right? How much it is? 30,400. Calculation is already done in realization account, so no need to show again calculations. Then anything else? Refer this side, Tanu's capital account. Tanu's capital account debtor to realization account. Yes, so Tanu's capital account debtor to realization account, isn't it? So let us post this entry, Tanu's capital account debtor to realization account. Realization account. What is that? Debtors taken over, right? Debtors taken over. Yes, then one more entry is there, that is Sonu's capital account debtor to realization account, machinery taken over. So you just write here like this, assets taken over, so that your number of entries gets reduced. Assets taken over. See, what I will do here is assets taken over. This is debtors taken over by Tanu and machinery taken over by Sonu I will pass with, I will write only one entry here. Then, so right here in Tanu's column 55,000, right? Then in Sonu's capital account 40,000. So I wrote assets taken over. Either you have to write debtors and machinery taken over or assets taken over. It is the best that is the word to write. Then what else? Refer it. Yes. One more asset is there. You can add it together with this. Tanu's capital account, one more asset is there. That is motor car taken over 60,000, right? So why don't we write here itself? Let us change this figure and let us add together, and we will write the total amount. Assets taken over I wrote already. So make it as 60 plus 55, isn't it? So 1,15,000. 1,15,000. Make this figure as 1,15,000, so that two assets are covered here and one asset is covered here. So all the three assets are covered. Correct. Then, are there any other entries? No, I don't think so. Yes, let us close it and find out the difference and make payment to the partners. Credit side will always be greater. So I'll write the total of credit side first, then find out the difference. So how much? 1,26,400. Is that correct? 1,26,400. Yes, it is. 126,400 in last column. Then 160. No, it is 170. 1,70,000 in Tanu's capital account. Here also write the same amount, 170 and 126,400. 126,400. Isn't it? Then find out the difference to bank account, right? Bank entry you are passing, so to bank account, not to balance but down. Remember, to bank account, final payment made, balancing figure. Now find out the difference and write the difference. That is 31,500. 31,500 and 72,300. 72,300. Yes, that's all. So your capital account is done. Move on to bank account. Last part, bank account. To balance brought down. Balance brought down. How much? 16,000. Refer old balance sheet. Bank account shows debit balance here. Bank account may show either a debit balance or a credit balance. If bank appears on the asset side, then it is cash at a bank. If bank appears on the liability side, then it is bank overdraft. In that case, it will show credit balance, not debit balance. Here, bank is on the asset side, so debit balance. Clear? Then, refer realization account, bank account debtor to realization account, assets realized. So, pass the entry to realization account. Realization account, assets realized. How much? 90,000. 90,000. Then, what else? This side no entry. This side realization account to bank account, liabilities paid. Realization account to bank account by realization account. Realization account. Or liabilities paid, right? Liabilities paid. How much? How much is paid? That is nil. That is creditors. So right here, realization account, liabilities paid, nil. Why we are mentioning it? Because creditors are to be adjusted. So we have to show it. So that we will come to know it is adjusted. Correct? Then any other entries? Bank entry? Yes. For expenses by bank account. Correct? By bank account. Expenses of realization by realization account. In bank account by realization account. Expenses. Expenses. How much? It is 2,200. 2,200 by Tanu's capital account, final payment, right? Tanu's capital account, final payment, refer capital account related to bank account. So bank account is credited by capital account, final payment. How much? 31,500. 31,500. Then by Sonu's capital account. Sonu's capital account, final payment. How much is paid to Sonu? 72,300. Right? Yes. See whether it agrees or not. It must agree. It agrees. 106. 1,06,000 is the final. That is a total of bank account. It's done. So your problem is solved. Now take assignment question. Alright, solve the same problem, that is Tanu and Sonu, and submit on time. Clear? Yes. Page number 78, problem number 17, Tanu and Sonu, whatever you have solved, same problem, you have to take it as assignment problem and submit it on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.